Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of AMC Entertainment, ticker symbol AMC. And so I am recording this on Sunday, October 26th, after AMC closed on Friday, October 24th, at a price of $2.69. Maybe there's some good luck in that number. Maybe I'm just an idiot trying to have some fun. Who knows? But yeah, wanted to go over the chart. Also wanted to go over a little bit of options data that might be, a nice way to accumulate some shares cheaply and or hedge in the possibility of that it doesn't go down. The price doesn't go down. You could actually make some money on premium. So I will be going over that. Maybe it's of interest to you guys, maybe not. But first, I am going to go over the chart and just what I see in it, because this is helpful for me. Hopefully it's helpful for you guys. Let me know in the comments below if you do enjoy this. And also, I should note, I will be doing ticker requests live tonight, but I'm actually going to be beginning that a little bit early to go over a stock that I find to be really interesting, that is kind of backed by somebody who's really interesting as well. So make sure you tune into that, whether it's live or after the fact. Should be a really interesting show tonight. But anyways, looking at the chart, you can see here that we put in a lower low, hit a low on Friday, October 24th, at a price of $2.62. So not really looking too good there. The low over here on September 4th was at a price of $2.67. And so we did close above that low. So maybe that's good, but generally putting in a lower low doesn't really seem that great. And also we do have this blue line here, which is the 50-day simple moving average, or SMA, that is currently at a price of $2.86. So that does seem like it might be acting as some resistance if we do go higher. But before I get into the levels on the chart, I did just want to point this out real quick over here. Number one, I guess, since it's up here in case I forget, is earnings will be reported on November 11th. I'm not going to stream that or anything, but it's just something to consider based on the options data. The move that is expected around earnings is 11% to the upside or the downside. That's about 30 cents. So do keep that in mind. But what I wanted to point out over here, I'm just going to zoom in so it's a little bit bigger for us. Now we can see that max pain for Friday, October 24th, was $2.50. I was expecting it to be about $3. So I was not impressed with the close at $2.69. But we did close above max pain, so I think that's good. Now, the real key is going to be, what happens around Halloween. October 31st, we have a max pain of $3. So we get back up above that level and start to close above max pain for the following, 4 weeks or so after, Halloween, and then the few weeks after that, I guess I should say, before max pain does drop back down to 250. So something to keep in mind. And also, this was pointed out, I believe, in the last AMC video, it might have been a different one. Max pain changes every single day. New data is coming in, and that's options data, and that is going to affect what the max pain is. That is the maximum amount of pain for retail if there are a bunch of puts with a strike of 250 and price closes at 3. That means anybody who is short AMC betting that it would be below 250, they're out of the money. They're losing money. And then with that, that would be then balanced by calls that have strikes of 350. If price is closing around 3, those calls are also closing out of the money. They're going to 0. So that's maximum pain for retail. And so that's going to be $3. Just, kind of a simple example there for you guys. But yeah, just keep that in mind. $3 coming up for Halloween. We want to see it price closing above that. But then coming back to the chart, I think that you guys are probably a little more interested in this. What do I see with this? I'm going to throw up the drawings. They're going to be a little bit overwhelming initially. I'm going to delete some of them, and then we can move forward with, kind of my perspective on this. And so what do we see here? Number one is this doodle. We did bounce, from this level over here, this little uptrend that I have drawn there, but we didn't get up to, let's see, 320, pull back to this uptrend, find that as support and go higher. So I'm going to delete that doodle because it's just clutter. Also, what we can see is, well, I guess since I did mention it, that uptrend, we did break below it. So I'm just going to delete that again to clean up the chart. And we can also see this Fibonacci retracement here. And so that was, locked into place. So it is pinpointed to the levels, the exact highs and lows, with the low on September 4th being $2.67. As I had mentioned, we wicked below that. We closed above it though. And then also with that retracement, we do have the high over here, October 3rd. That high was at 306. And that is just, extended to the future over here. But we can see, actually, wait a second. That was the close. So I want to look at the high, not the close, 318. So yeah, that is pinpointed there. But as we can see, we've broken below that 786, so the red line there, which is, around 278, somewhere around there. I also do have this green line that I've talked about, 279. So, yeah, closing below 280, not looking so good. But is this a dip buying opportunity? I think maybe. Maybe this yellow line is some hopium around that. We'll talk about that in a minute. But since we have broken below this retracement, below that 786, and we have wicked below over here, I'm just going to delete it to clean up the chart. Already it looks a little bit fresher. But yeah, we can see that we closed right at this yellow uptrend. What's that based on? I think a couple pivot points. I do believe I drew that to the exact prices in the last video. So we'll take a step back and look at that. But yeah, 269 right here, closed at it. Maybe that's significant. Maybe it's not, though. One thing that does stand out to me as being significant in the chart, you might be able to see it. I had previously pointed out that volume was increasing. Well, we did have this little blip here. Generally, the trend is showing that it's increasing. And this is also something that Free Wyckoff's, Rico, who runs Free Wyckoff's, has pointed out that AMC could be getting into, breakout mode with it being accumulated here. A lot of volume suggesting that it is being bought up. And we can actually extend this trend forward. I don't even have to adjust the slope of that. Pretty crazy. But we have just seen this very steady increase in volume. While we have broken below 280, we got a weekly close below 280, so it's not looking that great in that sense. This increase in volume does suggest that there is some demand over here. So I think that's good. We just want to be closing higher. And since I did mention the weekly, I'm just going to remove the drawings for a second. I'm just going to pull up the weekly so we can see what that looks like. And yeah, from this, you could say that we have been putting in higher lows from this bigger picture perspective. We got the lows over here from the week beginning March 31st. The low for that week was 245, so I think that's an important level that we'll want to consider. And then also over here, the week beginning April 28th, that was a low of 253, another level we will want to consider. But then the following week, the low was 257, and that was the week beginning May 5th. So we do have some lower lows that maybe we'll be testing, but that's looking back, lower lows looking back. Looking forward from these points, the low that we hit, which was effectively on Friday, October 24th, that was the low of 262. Relative to the lows over here, that is a higher low. So there is some hope there. So there is, something to be thinking about with that. And also, talking about volume, I was just talking about volume. We are seeing some increases on the weekly of volume. So I think that's good. Although, if we do go back to, this big move back in May of 2024, that volume was huge. We're not seeing anything like that over here, but relative to what we have seen following, let's see, this is going back to June of 2024, we're seeing the most amount of volume over the past week that we've seen since back in May, or let's see, maybe if I just go back over here, this candle was the week beginning Monday, June 10th. So yeah, we'd have to go back more than a year to see the amount of volume that we've seen this past week on AMC. So it would be great to be seeing increasing volume at highs, that it is picking up momentum that way. But this could just be, kind of the fake out breakdowns that shake people out of positions, shake out weak hands before this does start to pick up some steam, get above 3 and beyond. But yeah, let's go back to the daily, and I'll pull up the drawings again so we can just kind of take a step back in time to look at those. And, I did want to talk about this yellow trend line because I think that's very interesting. But, before we do that, let's just, inch our way back in time. That green line at 279 closed the week below that. So, it's not looking so good in that sense. And that low is based on the low. I got all these pop-ups. I need to start paying for TradingView. I'm going to do that around Black Friday. I'll pick up an annual membership or a subscription then. So I won't get so many ads. But anyways, the low from July 1st was, as you can guess, 279. We did test it over here with a close below it on August 6th, 278. I do believe I put out a video then before we moved up here. Got multiple closes below it over here and again over here. So we want to see ourselves reclaiming that, and again also reclaiming that 50-day SMA at 286. Once we start to see like multiple daily closes above that 50 SMA, which is now at 286, that's going to change every single day though. But once we start to see at least 2 daily closes above that, maybe we start to see momentum shift to the upside. We're not seeing that just yet. And let's continue to inch our way back. I believe I might see that white uptrend first, before the yellow one. So the yellow one is a little bit more significant in my view because it goes back further in time. We have seen some wicks below the yellow uptrend. So seeing a wick and close right at that trend line for Friday the 24th. That's not such a huge deal, so no panic, don't worry about it, in my view at least. I could be wrong though. But we do see this white uptrend, as I was just talking about, that is based on the low from April 4th, which was at 245. And also, let's see, what's the other pivot point? And the low from over here, so April 30th, and that was at 253. So we do have 2 lows that I think are very important to pay attention to the downside. One is 245. We definitely want to be holding above that in my view. And then another one is 253. I'd say we want to still be holding above that. We don't even want to see a wick down to 253 or any price action below 253 or at 253. We want to be seeing it holding above that because then we're still maintaining higher lows. 245, 253, 257 from Monday, May 5th, the low is 257. And then, over here, the low of 262. And so what I am doing, which, I am not a genius or anything, I am a degenerate, as you guys can guess based on the name of the channel. But what I am doing, I'm trying to be a measured degenerate. I did add a little bit more at 269 because I'm an idiot, got to have fun with the numbers. I only bought 10 more shares, so it's not like a huge risk. Not doing anything with options. Just wanted to add 10 more shares incrementally, grow my position a little bit, stay engaged with the chart and whatnot. But, for me at this point, I don't plan on buying anymore, but I do have an alert placed at 257. So that's the low from May 5th. I'm not buying there. Don't have any limit orders placed. Maybe I would consider adding 10 more shares at 257, but I kind of want to see how the price action responds to it. And so these are the 3 lower lows that we want to be maintaining a higher low above. So that's 245, 253, and then 257. And so I don't think it would be the end of the world if we wicked down came down to 257. I don't want to see us going to 253. If we get a low of 254, I think 257 was a buying opportunity. If we get a low of 252, I think that we're going to be retesting 245, and I think it could be rolling over and going down further. So 257, I view that as a dip buying opportunity. Although, I'm not letting that, get the best of me. I'm not getting emotional. I'm not going to throw anything at it. I'm just chilling. I'm just eyeing it. I'm just watching it. No big deal, because this, we've started to put in a lower low on the shorter time frame. On the bigger time frame, again, going back to April of 2025, we are still maintaining a higher low. So I think that's good. I still think there's hope, and I think that 257 could be a buying opportunity, but I don't have anything placed. And I'll come back to that 257 because related to options, I think that there could be actually a nice way to pick up shares cheaper than 257 by selling a cash secured put. So I'll go over that in a minute. But yeah, just wanted to talk about the chart here and see, this higher lows, now resistance over here, maybe coinciding with the highs over here around 326, that yellow line there. So do keep that in mind. But we do have this downtrend here going from the high of May 27th of 2025. That was at a price of 408. And the other point there is going to be the high from July 21st. And that was a high of 341. We did get rejected from that high, that trend line over here. We did get a fake out breakout over here, and now we're kind of hanging out around that trend line. So maybe there's some support there. Maybe there's some confluence with that yellow trend line here, which I'll talk about in a minute. But maybe also not. And while we do have the levels up here in this time frame, I'm just going to switch this over to the log y-axis just to see where price is relative to these lines. They're going to maintain the same pivot points, but yeah, from the highs over here, we're actually below that trend line. So that actually looks like resistance. There's a lot of resistance, again, getting up into that 50-day simple moving average at 286. So we want to see us not only getting 2 days close above that 50-day SMA, 286, which now that price is lower, that simple moving average is going to be moving a little bit lower because price is lower. Every day that moves forward, more data, but that's data bringing it down. So let's just say 286 is the simple moving average for the next 5 trading days. If we get 2 closes above 286, I think that's a good sign. So keep that in mind. And also, I didn't point this out, but you guys can see it. We did have decreasing volume into here and now. I am blocking it a little bit. But we do have that increasing trend of volume. So I think that's good. And with this decreasing volume, we did have decreasing higher higher highs. We did have lower highs in the RSI, and that was also corresponding with lower highs in the stock price. And so there's no bearish divergence with that. What we do see following that, I might actually just switch this to the linear just because it doesn't really matter on the shorter of a time frame unless we're looking at those trend lines, So I guess, maybe it does matter a little bit. I think that this kind of caps it, makes it look a little bit less encouraging. So good to be considering this realistically. But what do we see here? Sorry, I haven't looked at this or thought about this before starting to record. But we do see a lower high here. And so corresponding with that, we actually have a higher high in the RSI. So with this lower high, I'm actually just going to pull this up so you guys can see it. That's going to be, that's going to be hidden bearish divergence. And so the way that I'm going to pull that up, I'm just going to do hidden bearish divergence. And let's just look at some images over here. And I think this is the one I really like to go to. I think this is just very easy to understand. So hidden bearish divergence would be lower highs in the stock price. I just talked about that. We didn't get up to that high of 326, so you can very clearly see that. That's a lower high. And then we have a higher high in the oscillator, which in this case is the RSI. And so from that, relative to the high over here, we have a higher high in the RSI, lower high. So that's hidden bearish divergence. We've since seen a pullback. So that's the reality of that is that was hidden bearish divergence. We've seen a pullback. Maybe the pullback's over. Maybe that's the move. And so to kind of evaluate that, let's now consider we do have a lower low in the stock price. And I think that you guys are going to like this. Let's look over here. A lower low in the stock price. So looking at lows, regular divergence here, lower low. Okay, so maybe we have some regular bullish divergence. We want to be seeing a higher low in that oscillator, the RSI. And if we look relative to this point, we have the RSI right around the, it's not the exact same date, but the low was 34.77 on the exact same date. The low over here, it was around 35.72. So is the RSI over here lower than 35.72? I don't know if you can see it on the screen. It is, let's see, I think Ed's blocking it, so I might just move this up a little bit so you can see it just above his head there. What you see is the RSI here, 35.72. Over here, the low for Friday, October 24th, or not necessarily the low, for the day, that was the RSI, which I think is based on a 14-day moving average. That was 40.56. So we see a higher low in the RSI, a lower low in the stock price. And so that's, a lower low in the stock price, a higher low. Hey, that's bullish divergence. So I think that's actually a good sign. What we're seeing here, increasing volume, higher low in the RSI with a lower low in the stock price. That's bullish divergence. So I think that's looking good. We can move this back to linear if we want, back to log here. But yeah, that's making me think that if we do get a dip to 257, that would be a dip buying opportunity. I don't have an order placed. This is making me think maybe just to get 10 shares, something like that. I don't know. But before we go over to the options, which I think could be a better way to pick up shares, if you want to get more than 10, if you want to get in increments of 100, I think that could be a really nice way to pick up some shares. But let's look at this yellow line, this trend line here. And I don't know, do we want to look at this in the linear or the log? It doesn't really matter. But this is just based on, let's see, the 2 pivot points. One is going to be the open from April 16th of 2024. That was at 272. And then the other point, it looks like it was the open from April 4th of 2025. And that was at a price of 265. And so I'm just going to pull up the little gears here so we can see. And in case, I did screw this up. Let's see, the open price was 260. Maybe I said that wrong. I'm used to not looking at the open prices, but 260 was the open. I do have that right here, 260, so that's good. And then over here, the open on April 6th was 244. 244 right there. So pinpointed to those levels, whether I'm looking at this on the log or the linear, it's pinpointed to those points so that line doesn't change. And we can see over here that we did get some wicks below, dip buying opportunity before going up about 50%. And then over here, we did test that yellow trend line before going up 17%, so nothing too crazy. Now that we're testing it again, are we going to go up again? Let's be conservative, about 17% from that trend line. That would be getting us to around 318. So that's like testing the high over here. That was the high on October 3rd. I don't have the numbers up there, but I remember it at 318. I just talked about that earlier. And so maybe we see a move to around 318. We start to get some closes above 3. Maybe earnings are good with Taylor Swift. Maybe we're starting to get some more people going out into the theaters. One aspect of that is Frankenstein out in theaters right now, which is a Netflix movie, but Netflix has decided to put it out in theaters initially. I must say, I'm very intrigued to see Frankenstein, but for me personally, you do you. I saw some screenshots of it. It looks like it might be a little bit gory. It might be a little too much for me to handle personally. I know my limits. So I might actually refrain from going to see that one in the theaters, but I'm very intrigued by it. Guillermo del Toro, creepy, goth horror, or, suspense, all of that. I think that might be a really good performer in the theater. So I'd encourage you all to go see it if you don't mind the gore, if you do enjoy that stuff. But for me, I might refrain just personally. I know my limits. Sorry about that. Yeah, but I'm very intrigued by it. And also related to Netflix, that there's a deal. Adam Aarons announced a deal with Netflix that there's going to be a partnership there. So I think streaming is actually starting to recognize that there's value in movie theaters. I think also that Disney is starting to recognize that there's value in theatrical releases. But there's also value in writing good stories and writing good characters, which they've totally dropped the ball on, whether that's with Star Wars or Marvel. And we need to be getting, good writers to work. We need to get good storytellers, good actors, good performers that take the character and put the character on the screen, not that puts an agenda on the screen. I want to go to a movie theater to escape. I want to put my phone away. I want to turn off any agendas. I want to put away any, whether it's political, personal, social agendas aside, whether I agree with them or not. I want to go to the movie theaters to escape. And I think that Disney's definitely been taking hits for that. I think that they've taken a franchise like Star Wars and invested too much into streaming series like Grogu and The Mandalorian, or The Mandalorian and Grogu, whatever it is. And, they're recognizing that I don't think that too many people are actually going to turn out to the theaters to see that because they recognize that it's like a TV show going on the big screen. It's like an episode, and it's probably going to be, it's like they've raised the bar of episode quality from streaming or TV, whatever it is, and they brought down the movie theater quality, whether that's writing, whether that's agendas, all of that. And I think that they're kind of recognizing, whether it's Disney, whether it's Netflix, whether it's, the demand, our demand, we need to go back to the basics. Good stories, good actors, good storytelling, good characters, and that's going to put butts in seats. And people want an experience. People want to go out. And I think that we're starting to see a shift back into that narrative. And I think that that could be really good for the bottom to be around here for earnings. Taylor Swift, Netflix, Frankenstein, Star Wars going back into theaters. We're starting to see that shift. And it's not going to be an immediate return, but I think that this could be the bottom. Anyways, that's a big rant. That's a big tangent. Hopefully you guys enjoyed it. Hopefully you sympathize a little bit with my perspective. I have to say, I really wish I could go see Frankenstein, but I know it would be tough for me. But anyways, yeah, dip buys here. Yellow line. That's performed in the past. Maybe it does in the future. And this is on the log scale. We've said goodbye to this purple trend line. We do have this green trend line. We need to be getting above that. And that is going back to, the highs from November 6th of 2023, and then also the highs from December 5th of 2024. Man, that day emotionally scarring for me. Emotionally scarring. But if we do break out from that, a level of resistance just being psychological, I think it's going to be around $10. So I don't know what your averages are, but I think that, at least for me, what I'm going to plan to do, and I don't have any orders placed right now, but for me, I could have sold here, I could have trimmed here so that I could more comfortably buy down here. And so my kind of plan, my thesis, and again, you do you, for me to manage risk, to be able to continue to participate. If this does go up to 10, I'm going to trim a little so that if we do get a pullback, I got more capital to deploy. But the difference in this next test of 10, in my view, is that it could be continuing. It could break out above 1143, which was, I guess, the high over here. And let's see, what was the high on May 14th of 2024? The high was 1188 during market hours. I think we could get above those levels. I think that we could wick above them, but then maybe pull back below 10 to consolidate before we do start to continue higher, which could correspond with breaking above this trend line, which goes back to the highs of 2021, June 2nd, 2021. The high split and ape adjusted. That high was $393.63. And I, to be clear, am not suggesting price could be going that high anytime soon. But just look at where the cursor is at. I didn't plan this out, but that does correspond with some lows that you can see there. I'll move the cursor in a second. I just like where it's at now. It's around 36 bucks. So if we do go up to 10, maybe we see a pullback, maybe some weak hands get shaken out, or maybe people adjust, manage their risks so they could buy back on a dip. And then buying back on that dip, then maybe we could start to see breaking out from that trend line. And then I would think that the next level of, more notable resistance is going to be the consolidation lows that we had around 36. So just, over here. I think that's going to be some resistance, but maybe it takes a year plus for us to get up there. So time management, risk management, all of that. But yeah, just coming back here to look at this on the linear scale, since I think we're most familiar looking at this on the shorter time frame and crying. But yeah, let's look for a close October 31st on Halloween above $3. Let's look for a reclaim of 318. And let's start to get some closes above this high of 326, as I had previously doodled before. And then maybe we start to find this trend line as support, which, doesn't really change if I switch that back and forth from log to linear. So yeah, let's start getting some closes above 318, 326, and then maybe we could start talking about getting to the fours. I think that what we saw on Friday, the 24th, the low of 262, might get tested again, 253. 257, and that was the low from May 5th. So let's talk about that in relation to options. And so this is kind of zoomed in. I'm going to zoom out, and maybe I'll zoom in a minute so we could talk about it more. But yeah, it's 100% right there. So I have to say, I do have some calls on AMC. I'm just going to touch on them briefly. I think that calls are a very bad idea. I've got GameStop typed in there. This is not a GameStop video. But yeah, for AMC, also with GameStop, don't have any calls with that. I think that these are risky to have contracts. What I do have the $20 call that expires in January. I think this is going to go to zero. I kind of regret getting it. But I'm just throwing it out there that I do hold it, and I accept that I'm probably going to lose money on it. I've talked about it before. I apologize if you hold it, but we got to manage our risks. And I think that call options, going along with call options, is a bad idea because we never know how long it's going to take for these moves to play out. One that I think could be a good performer, this is one that I do hold, and actually talking about it right now gives me, hey, maybe I should consider this. This is the $5 strike call that expires 446 or 444 when market opens on Monday, or 43, whatever it is. And this is the January 15th of 2027, so more than a year between now and expiration. $5 strike. I think I have two of these contracts. I'm just going to pull it up on my phone so I'm not, feeding you false information. But so for this one, I have one contract of this with an average price of $1, and the average fill for Friday and Thursday was 54 cents, and the average fill on Wednesday, October 22nd, was 52 cents. So, maybe if I could get a fill at 50 cents, which we haven't seen scrolling back, I think I talked about that before, maybe that would be a nice way to get my average down to. Two contracts at 75 cents, I don't really know. But yeah, I'm not thinking about this really. I guess I am thinking about it because I started talking about it. But I'm not really considering going long calls just yet, and that's because of the data that we see behind me. This is going back the past 30 days. So that's the maximum I can see here on unusual whales. I could expand this, but it doesn't really matter. Just the thing that's standing out to me, we can see yellow is the stock price went up, and then stock price came down. As we know, we just hit a lower low in the shorter time frame. And we haven't really seen net call premium suggesting that this is going to be taken off. We did see a spike over here around $1 million, but price went up and then price came down. The spike over here on let's see, that was October 21st. That was around $400,000. So it's not like millions of dollars going long. Green is net call premium. So this is not screaming at me that AMC is going to be going up very soon. So I think we got to wait for the data to tell us that the momentum shifting, bottoms in. And we do see the red line, that's net put premium. We haven't seen that go up or down exceptionally high or low. What would be suggesting the bottom is in is if net put premium drops, that means those who are short are starting to sell their puts because they think the bottom is in, or that means that people, institutions, whatever, whoever's buying, I don't know who, or selling, if they're starting to sell, they could be selling cash secured puts because they'd be collecting some premium, betting that price is going to go up. And if price goes up, they just get to keep that premium and they get their money back. They make money on it, but they don't get shares. And so that's a good thing to be making some money on premium. And so what I think might be a nice way to either trade options to collect premium and or to pick up more shares cheaply with that number of 257 in mind could be to sell a cash secured put. Excuse me. This contract I've talked about before. I've also talked about an October expiration, but that one's expired. But this is the $3 put that expires November 21st, so about 26 or 23, whatever it's going to be on Monday, days between now and expiration. And current price is below $3. And so if price closes below $3 on November 21st, anybody who has sold cash secured puts would then have to, they would then have to buy the 100 shares. But then that would be, actually, let's see. I don't do too much with cash secured puts, or at least I just do for swinging the premium. So let's think about this. So if I sold a cash secured put, the low, on Friday the 24th was 45 cents. And I'm going to try to zoom in. I don't want to make this too crazy, but yeah, okay. I think that we can, manage this. Actually, no, I like it at 100%. Sorry if it's a little hard for you guys to read, but I'll read the numbers to you. The low on Friday was 45 cents. So let's say I pull up the calculator here, and it's, a $3 strike put. So it's like I'd be buying, 100 shares at $3. So that's $3 times 100 shares. That's $300 risk right there. I need to have $300 to secure this put. But if the premium is 45 cents, that's 45 cents times 100 shares per contract is $45. That's $3. I should maybe point over this way. That's $3 times 100, $300 minus 45 cents times 100 is $45. So minus $45. That would mean it cost $255 to secure this put, cash secure this put, $255. And what's $255 divided by 100 shares per contract? That's $2.55. That'd be getting shares below 257. And that's the low from Friday. And the low from let's not talk about the low from Thursday. That was 41 cents. 35 cents. But yeah, right around 50 cents, you could be getting shares at $2.50. But so let's think about this. If the put closes, expires worthless, that means it closes above $3. This contract goes to zero. and I get my premium back. Okay? And so that would, I get my, what I put up front back. So if it costs $300 and I get paid this premium of $45, from this low over here, that means I'm putting $255 on the table. And if this closes out of the money, goes to zero, that means I get my $255 back. And so that's fine. And I effectively, I made $45. I get $45 initially up here. And then I have to secure that put with $255. If stock price closes above 3, then I get that $250 back, and I made $45. But if it closes below $3, if it closes at $2, then I get a sign. I end up buying 100 shares at $3, but with that premium that I collected, I'm actually buying at $255. So I think that this is a nice way to either accumulate shares or to be bullish and to collect a little bit of premium, and then that $45 could then go into buy shares at $269. How many shares does that get us? Actually, maybe this is a compelling argument. I'm not planning on doing this, but I'm just making the argument here. What's $45 divided by $269? You could pick up about 16 shares by selling this cash secured put, just setting aside $255 on the side. And if AMC closes below $3 on November 21st, you get 100 shares. If it closes above $3, you get that $255 back, and with that premium, you would have picked up 16 shares. So I think that's kind of a nice way to add to the AMC position. And on the note of November 21st, what's the max pain for that day? I'm just going to zoom in on this. November 21st, it is $3. So maybe we close at or around $3 a share. So picking up shares on November 21st at an average price, considering premium, of $255, that might actually be a good deal. Although we could be seeing price dipping a little bit lower after that. But yeah, anyways, this has been a long video, almost, about 42 minutes now. But I just wanted to share my thought process. I want to share my perspective. Hopefully it's helpful for you guys. I do think that we could be, at the end of the tunnel, but that doesn't mean we're seeing a lot of light yet. And so I think that we're starting to see some hope. And let's see how we respond to 257. Do we go lower than that? Do we test 253? I would think that's bad. If we test 253, I think that we're going to be testing 245. And then we could be hitting new lows, which is at 238, if I remember that correctly. But yeah, right now, that's not happening. We're imagining that in the future. That's a scenario we need to be prepared for, that we could be hitting new all-time lows. But I think that things are starting to change in our favor in the industry, whether that's streaming moving into the big screen territory with a partnership with Netflix, or with the Taylor Swift stuff, with Disney putting stuff back on the big screen. Whether that flops or doesn't, that is a shift in the right direction. And so I think that what we're going to be seeing, like a year from now, I think that we may test $10 between now and a year from now. But I don't know that we're going to be holding above it. If we do, and we start to hold that momentum, I think that we could be testing 36, maybe a year from now, but maybe 2 years from now. So keep that perspective in mind, that time frame, manage risk, do what works for you. I'm going to do what works for me. And what's been helpful for me has been coming back to the chart, looking at it, thinking about it critically every couple of weeks, making a video about it. And, I hope it's helpful for you guys. But as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this, coverage of AMC on a bi-weekly basis. And make sure you tune into Ticker Request Live tonight. Going to be going over a very interesting stock, a very interesting person, and I'll probably be taking requests for about half an hour, and maybe some of those that I don't get to will be rolled into videos. So yeah, make sure you tune in. Have a great rest of your Sunday and a great start to your week. I look forward to seeing you this evening if you can join, and if not, I'll see you in the next one. Take care, you guys. Bye.